Traders, good morning. It's Monday. I missed doing a video update last night. I was just hanging with some friends, and the weather's turned down here, so it's beautiful out. Um, Down here in South Florida, I'm actually sitting on the patio, so if you hear the birds going, um, yeah. Anyway, it's a nice morning. Let's do a top down though. I look at S&Ps. Actually, well, I'll go back to long bonds. I love treasuries, and that's one of my go-to asset classes and something I've traded for a long, long time. So long bonds, do a top down. I just went over this in the active trader room. I've been talking about 30s. I think they're going to hold back here towards pi for a while. All right, so we pretty much held it exactly, and you have a conflux of two different trends. You have the intermediate term move, which has been bearish really ever since, I would just say, this was a range trade, but the bands really broke at the middle of September. So we've technically been in intermediate term, I would call it downtrend, right? Uptrend in rates. But now we're bumping back into the longer term TMS, as I call it, technical market structure. So you guys see how these bands are all bullish, and now the market price action is coming back into these bands. So I think you're going to see the longer term bull take back over, and this intermediate term down move is going to be yet another place where everybody freaked out. Every time we get these pullbacks, people say, oh, rates are going higher, start chasing the Fed's tail, all right, and then growth slows and the bonds rally again. So don't forget, when we talk global macro, we're coming into one of the hardest comps as far as the base effect comparative to last year as far as jobs data. So last year, jobs growth was at the peak year over year, and on the margin now we've been slowing. So this October was one of the best jobs prints last year. So it's going to be very crappy comparison relative to last year. And that's true for the next several months. So I don't expect good jobs data. And looks like GDP is tracking for fourth quarter maybe below 1%, and even the first quarter of next year to be near zero. So we're getting closer to official recession. Growth is slowing. You want to be sticking with long bonds, all right? As long as if GDP is slowing, U.S. GDP, Treasuries is a good place to be, right? And I don't chase the Fed's tail. I'm actually ahead of them. I think if we do have a bad jobs number here in November, you're going to see the Fed pivot back to dovish. All right. So anyhow, even if they do raise, look at the last time they raised, right, in December. Look what the long bond did. It rallied. Okay. So the Fed can try to control the front end of the curve, but they're not. The overall market is going to always dominate the long end of the curve, which has to do with a lot of growth slowing or accelerating, has to do with inflation risk, and then credit risk. So far, the flight to quality in U.S. Treasuries, there isn't, they're still seen as the riskless trade, as they say. Now that may change 4 years from now, where that's government bonds are not the flight to quality, and they're actually deemed very risky. That may flip, but until then, growth slows. You want to be long the bond, as long as if there's no inflation. All right, and growth is slowing, you want to be long treasuries. So that's what the game plan is there. Now our risk is below pi, so if we trade back below pi, then I'm going to have to cut my risk, my long, maybe go to the sidelines and kind of reassess. All right, guys, so there's a 4 hour. So we've been nibbling down here. I want to see us take out this kind of 165.5 area, and then maybe we can get a move for 1 or 2, 3 points back here towards 168. All right, so we did book some gains though this morning, and I'm going to be trading it around. So we get high within the range, you sell some. We get back lower within the range, I want to rebuy. All right, if we look at stocks, just keep playing this 4 hour, guys. It's pies rolled over. All right, so I resold what I covered last week. resold some this morning. Let me go ahead and annotate that. And then if we get a move back here towards 2160, I want to be a seller again for sure. All right. You're high within the 4-hour cycle. All right, so I like reselling up here, and I did. I like to keep track of this 8.6 count on the daily. So this was the cycle low. 1, 2, 3, 4, 5, 6, 7, 8. Now we're in another new cycle. It's just another rhythm. So we'll see. But anyway, we finished. You can see this was a cycle low, and then we cycled back up for 8 days. So we'll see what the next 8 days brings. But we're pretty high on the daily cycle here too. So if this crosses over, that's going to be good for our swing short. Just like when he crossed here. All right, the move was lower for the next 4 to 5 sessions. All right, that's S&Ps. Look at the gold market, very similar to bonds. I think this was a buying opportunity. It was tough because you broke this level, so I did stop on some. I gave back some money here, and now we're just going sideways. So again, I would definitely be a buyer back here towards 1200. I'm waiting to see if that's where I should get aggressive, or I want to see this 8 turn back up, and then there may be some spots where I can get more aggressive on the long side. All right, but the dollar's been pretty strong. Dollar looks to me like we're going back towards 100 or back towards par. All right, so I've been pretty vocal about that. We're long dollar futures. I like that as a pairs trade against long gold. It's tough for the dollar to go down and gold to go down. All right, and then the euro we're playing on the short side. All right, this looks pretty bearish. This looks like the start of maybe something, of a move to 105, and then we'll see if we can break 105. The thing though, guys, again, with this the catalyst to maybe get the dollar to back off would be if we rally into this resistance and then we get a bad November jobs number. And like I said, then the Fed's going to pivot back to dovish, and then you could see the dollar fall back here, right in front of the election. So that's definitely a possibility. But we don't read too much into that. We don't want to be doing a bunch of scenario building. It's just not very productive. We just want to trade what is, and this looks like to be at start of a new, maybe a bigger picture, longer term move. All right, we'll see. We probably have to get through the elections first before we get any real longer term next directional move. But something like this could be possible if we can get through these highs. We can get another leg like we had a couple years ago. That's the dollar. That's gold. Want to look at copper. These guys are teeing off out here. Copper. Still in a range trade, but I like selling bounces there. Global demand has not bottomed. China has not bottomed. We're still in this deflationary global deflation still is a main theme. Slow growth, strong dollar. Copper is not going anywhere, so we keep selling rallies. All right. So I think I have one small piece back on. I would really like a bounce to resell there. And we'll just do oil lastly. This one I'm out of the money on. It's getting a little bit annoying because I want to make some money, but I think we still need to roll over. If we look at, I guess this is the continuation chart. So I did resell a little bit here last week, and I had to roll some futures into December, and I just think that this needs to break 49.5 still and start making some lower lows, and then we can get a move back here. But if the dollar pushes higher, oil should struggle. Okay, I know there's probably still a lot of people watching these headlines at the freeze, yada yada yada. But overall, that's just been, a lot of talk. You want to watch what they actually do versus what they say. So anyway, this is still the high within the range you want to be short, but you see that the 8 is flat, showing us kind of the range trade, and again, we want to break the new lower lows on the hourly and 4-hour, which you can see these are the higher lows right here, 49.5. We keep holding, and consequently, I'm still short from about that same level. So, but I do feel a little more comfortable now that we've already been up here. You couldn't hold it. You give us some rallies back, 51 and higher, 52. I'm going to re-short. And then maybe now the weekly, it did finally trying to cross. So maybe we do finally get this next multi-week move will be to the downside. All right. So that's how I'm playing oil, guys. And the risk would be above, 53, 54. If we look at the DEES contract, oops. Bought some puts there. So 53 3/4 here on December futures. That's where my risk is, meaning I'll be short as long as we're below this high. Get above there, I'm gonna have to go to the sideline, stop, take some risk off, kind of reassess. All right, guys, enjoy the rest of your morning, and I'll be in the live room tomorrow. Listen, if any of you are new, you can always join my trading team. We have a chat room that's for free. It's powered by Slack. They're the guys that started Flickr. It's a great little mobile platform, obviously desktop too, but just visit jenkinsrm.com, RM's risk management, jenkinsrm.com, and you'll get a pop-up window. You can sign to join the chat room for free. And from there, we give people trials to the real-time alerts product, which is you can spend a day or two in there. You can see all of my trades. Sometimes it's a couple dozen trades we'll send out throughout the day, and sometimes even in Tokyo and London session, whether a day trade or swing trade or even long-term core positions like short financials or long Amazon, stuff like that. But that's a great service. That's only 149 bucks a month. That's pretty much, I signal a dozen trades in there a day, so one trade more than pays for itself. Alright, guys, and then the trade the open I'm doing Tuesday, Thursdays, 9 to 11, which we make some money in the morning. Obviously, you have me live, or you can ask questions. I do some teaching in there, and that's 349 a month. Okay, because it's live, but you also get the active trader alerts for free, which is for the year it's $900 value. So that's a great service also. And then I have the full access program that I'm just starting, and this is going to be the core group of traders. This is something I've wanted to do for a long time. So this is everybody that really is serious about wanting to trade for a living full time. You want to trade for life. You want to trade a little bit of everything. Or even if you're new, it's fine, but I want to build a serious team, a select team that we're going to have a 24/7 room. And so when I'm trading, I'll be in that room. It's going to be a lot of teaching, a lot of trading together, make money together. It'll be a nice core tight group. So I'm excited about that. But one of the things to be in that program is I used to do coaching. Well, I still do, but the group coaching sessions are probably going to be kind of put on the back burner for now. Because anybody that signs up for the full access program, we're going to spend a full day Saturday. I'm teaching you the JRM, my trading model and process. So there's going to be a price to pay to get into the program, but it basically includes all the coaching on the model and training. And then you're going to have a live 24/7 room, and you're going to have real-time alerts, and then you'd be part of that team for the long term. So I think that's what I'm most excited about. If you guys are interested in that, you can send an email to support@jenkinsrm.com, support@jenkinsrm.com, or just message me in the Slack room. I think that's pretty much all I had for this morning. All right, I'll see some of you in the room in the morning tomorrow, and enjoy the rest of your trading day.